The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. You know, I should throw this out there before I give you all the details in the minute. So I was at an event last week, Thursday and Friday, and there was a gentleman talking about loans at this event. And the guests there's probably about 300 people there, and they're asking him very, very specific questions about the loan programs. And, you know, it dawns on me that when you do that and you try and get granular on any kind of a loan program, you're probably just shooting yourself in the foot. You know, all you need to know is that, you know, there's loan programs where for rental properties, you don't need to have any income. There are loan programs out there for non-owner occupied properties and maybe some owner occupieds that you can use your bank accounts to qualify. If I go giving you all the details of it, that program may not be the exact right one for you. And you may say, well, okay, I'm not going to call because I don't fit. But there may be another one that we didn't just talk about that does fit for you. So I'm just throw that out there before I get into the Mortgage Minute, which I am going to do right now. Dow Jones or the S&P 500 is now up 93.68. We're looking at the 10-year Treasury. That's probably what's driving all these markets right now, is the 10-year Treasury down 4 basis points, 3.965. Mortgage-backed securities have been all over the place. They're now up 23 basis points, which means interest rates are down. And speaking of interest rates, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. 30-year loans on Friday locked at 6.974. Ooh, that's a new one. Ow! Jumbo 6.596, FHA 6.741, USDA out there in those rural areas 6.72, and the best loan on the market for those that earned it. That'll be the 30-year VA loan at 6.644. Why is all of this happening? What's driving the markets? You can find all that information out on that super secret website, google.com. But we got to find out why it's happening. That's why you tune in to Ron Siegel Radio. Usually we see that stocks and bonds are going in the opposite directions. Right now, they haven't been lately. Helping bonds today, though, is news out of the UK that the new Chancellor of the Exchequer, I don't know if I said that right. I probably did not. Call it Treasury Secretary, outlines his new plan, which is basically just a backtrack of the unfunded tax cuts. The 10-year gilt, that's the same as our 10-year Treasury. Yields are down 35 basis points to just under 4%, which is a 2-week low. As a result, European yields are also falling across the board. And in turn, our bond market is benefiting. It's rare that stocks and bonds consistently fall together and the end of the year negatively and end the year negatively. Since World War II, this happened 3 times. 1969, 2018, and so far in 2022. If the year ended today, this is big information for you. It would be the first time in history that both stocks and bonds were down over 10% in a year. The following year after this abnormality occurs, 10-year yields were lower. Looking at the year following the past 2 occurrences, in 1970, the 10-year declined 18%, while in 2019, it dropped 29%. Why is that important to you? Mortgage-backed securities, the mortgage interest rates follow that very closely. They're not the same. So if we split the difference between the two, would it be possible to see a 24% decline in the 10-year next year? 24% decline, which would be a yield under 3% and would be mortgage rates right around 5%. Now, I did tell you that I was at 2 weeks ago, the Chamber of Commerce, the Newport Beach Chamber of Commerce, their economic forecast, and they had the chief economist for the California Association of Realtors there. I think he might have been smoking something funny, but I'm not sure. And he made a comment that the 30-year mortgage would end the fourth quarter of 2022. That's where we are right now at 5.2%. 5.2%.
You know better than that.
I just told you we're at 6.97. It's not going down that low. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990.